Good evening. Our morning crew's now our late night crew. That's so good to see. And hey guys, that's just part of the market, right? We went through our 30-day challenge with Sydney. We traded a lot of US as well, and obviously the US session had proven its worth over the last 30 days. And yeah, here we are. Here we are moving forward with another challenge for all those that are. I know pretty much everyone on here has either done the self-paced challenge or has done the live challenge, which is great. Um, yeah, good work on staying committed to learning this strategy and yeah, just us diving into it. So keen for you guys to be here. I'm keen to start night sessions. Changed up my schedule a little bit to cater for a little bit of a sleep in. Not really, because you have kids and that's just the way that it is. But we'll make it work for what it is. So we're going to jump straight into it, guys, and get started now. Where is the screen? All righty. Okay, actually, I'm going to stop that and full screen this. Share that, and there. All right, guys. So over the course of the next 30 days, and I guess we'll take it month to month as we have it, but we will be trading both gold and US30, right? So we tend to get a lot more volatility during US session, obviously, which is why some of the trades you would have seen that I'd placed had happened over a few minutes. Some had happened in 5 minutes, 10 minutes, 30 minutes. Sometimes it happens over a longer period of time. But always to start with, biggest key thing is to find out our key areas or our overall rejection points. So we're obviously in this, this overall range here on the daily, our, 3408 where we recently hit and still a 3271 where we came back towards the end of last month and now hovering in between this overall range. Dropping down, we can see that we've been pretty much bearish here. And like we said, since the start of the month, we had this huge imbalance here of orders that kind of got filled, right? We were pushing out from here, but always one thing to be concerned about is if you have an imbalance here, which essentially means we've got a whole heap of pending orders here, there is a higher probability of price coming back and testing that level, as it did, regardless of us being up here at 3405, whatever it is, even if price was going to reverse and start to continue up from here, it was looking for orders to fill first, right? So we had price come back down and test that area where we're at right now. So key things to remember. Obviously, we're not going to touch the daily today. So we, bring that up to consider our 4 hour most recent areas of rejection. And, we're still kind of within this range at the moment. So our high now on the 4 hours, 3358 with a 3323 bottom. Dropping down to the hourly, we can see we're most likely not going to get to this, but a good area for consideration of where price is, right? So we'll just adjust that now, guys, for those that haven't been trading the opening range, this is essentially the orb strategy. It's been around for many, many years. I've backtested, trialed many different versions and ways to trade this strategy. Every version has a good month, a bad month, has wins and losses, right? It's just part of trading, right? There's no strategy that is 100% successful, but it doesn't need to be, right? The strategy doesn't need to be successful. You just need to have good risk management and not, go all in on any single trade. Using a 1% risk or a 1 to 2% risk is good, and just sticking to that with every single trade, right? Try and manage that as close as you can for each of them. So most recent area of rejection here and here, we can see we're obviously in the middle of where price opened at 11:30, and this is our 30-minute and this is our 15. So when it comes to the opening range, the biggest thing that we're looking for is the opening range candle. So 11:45, when this candle closes, we're only concerned about this candle here, right? So regardless if we push to the upside, if we push to the downside, if we look at the overall trend of where we are very much bearish, right? From market structure standpoint, we're bearish, but we're now in between a range. We're at 3345 and 3325, and we're already dipped into that imbalance. So there's a bit of uncertainty at the moment where price currently is. But again, with this strategy, to not overthink it, we're looking at once the candle closes on the opening range, which is at 11:45, we're looking to either take the break to the upside or we're looking to take the short to the downside. Considerations, right? We don't want to be trading anything that's over 100 pips. Again, high risk, yes, while high reward. We just don't want to take that risk if it's over 100 pips on the opening candle. We're also looking left to see if we're running into any kind of structure to the left, right? So we know that this is our 4 hour, this is our 1 hour, but that is also a most recent rejection area, right? So now that we're pushing up over that, that's cool. We then consider where price is most likely going to get held up next, which is going to be here before it hits here, right? So consideration of that price point there, right? So if this is our low and this is our most recent area of rejection, these are our pending target areas, depending on where that candle closes, right? Because the opening range is essentially we open at 11:30, at 11:45, we could close somewhere up here, we could close somewhere down here. We just want to see and assess if there is an area for us to trade up to, right? If there is not, then there is no trade, guys. This strategy is about coming to the charts every single day, at the same time drawing up your analysis and waiting for the next move to happen, right? So currently we're sitting at a 31, 37, 38, about a 70 pip move. So it's quite a significant move already out the gate. Now, when we talk about risk reward, there are going to be times when the trade itself is not going to be a one-to-one. Ideally, we want to do a one-to-one trade. If you do not feel comfortable taking a trade that is not one-to-one, do not take the trade, right? Very simple. If every trade that you want to take using this strategy has to be a one-to-one, then only take the trades that are one-to-one. I personally will take trades that are less than one-to-one based on where price is most likely to go and based on where previous structure is, right? So as long as I've got room to move and it's not a 0.5 to 1, because, okay, when you start getting less than 1 to 1, then your win rate has to be quite high. Now, the strategy's win rate is quite high, but you're risking less than 1. You got to be making over 50%, over a 50% win rate, okay? So see how we go for the next 7 minutes on this. Now, just looking at US30, sometimes we look at gold. Ideally, for me, I'm looking at gold, wanting to trade gold. But at the same time, we look at US30 as well as a option to trade. Now, US30 is currently quite large. Let's see the 4 hour. We've had a flip candle on the 4 hour. Okay, so prices come down, grab liquidity, which is good, and we've got momentum pushing to the upside. It's quite a decent move that's happened here. So let's take that and that. And yeah, so our opening range is pushing up against that 45 resistance. Then we have a little bit up from there. There's quite, it's still within a range currently on this 15-minute time frame. But if we break to the upside here, yeah, I'll look to take US30 to the upside. And yeah, gold is doing gold things, right? So same thing, opening range. We're only measuring the one candle, right? Even without consideration of technical analysis, the theory, the method is still the same, right? We have a 15-minute range, which is this candle here, 11:30 to 11:45. Once that candle closes, we are looking to either trade the break to the upside or we're trading it down to the downside. So currently how it stands, I think we're going to get this push to the upside, which in turn should flip gold bearish, but we'll see how we go. After we get an entry on either one of these candles, either one of these pairs, then I will go and look at BTC as well. So we'll see how it plays over the next 5 minutes or so.
Jason, did you test the strategy on BTC?
Sorry?
Did you test the strategy on BTC too?
It's not working the same way and not as effective. Although I've been trying different hours, not just the opening range. So it's a work in progress. But US30 and gold has still showing, the highest win rate on any of the on the many things that I've looked at over the last few months. So we'll continue to
Okay.
test and from there, so see what happens. Looks like we're pushing. No, well, that's still our. So just pushing resistance a little bit higher. So this range candle here now is, what are we at? That's 100 now. So risk factor is quite high. 331, that's even higher again. It's still going. So probably US30 is probably one that I wouldn't consider taking. Reason being is once you've had a significant move here, if you go and take the trade to do that, like I would more so consider if price comes back in to the range first. I mean, that is changing the strategy a little bit, but this is it's moving quite significantly. So this already, as part of the rules, we don't trade this. It's gone, quite silly at the moment. So taking a long from here is your risk factor is quite high, even if it is to continue to push up, right? So reason being, it's come down from quite deep and pushed up already quite high. So at the moment, gold's still within its still within its 100 pips of what we're looking at. Again, ideally for me, when I'm looking at them, I prefer opening range at 40, 50, 60 pips. Anything pushing higher than that, again, the move is happened. So you're getting quite a significant move. This here is pushing off that, we've got that 4 hour inverted flip here. That's a nice flip candle and standard technical analysis, not for this strategy, but grabbing liquidity for price to continue up from there. And you can tell that, it's grabbing this here. It wants that imbalance there. But yeah, that that US30 is quite volatile, right? So taking a move out from here, I would rather see price come back into the middle of this range before looking to break out from it. That's when I would consider trading US30 at the moment, not off the standard strategy, which is simply a breakout of the range because this thing just keeps moving. We've got 2 minutes left to see where we're going to end up on gold. So I'm only looking at gold currently, and we are still quite indecisive, quite risky being where we are right now. We're grabbing up here. So we have all that imbalance here where price is pushed up to. Continuation would be nice down to this previous structure, but it's looking like it wants to flip up further first. So again, we'll see what happens in the next minute. But your target is really shallow here. Even if we close here 337, we're pushing to a 3341, so it's half of what it's actually moved. Half of the actual overall move, so your risk is not the best at the moment. But we shall see, we shall see. This would be a partial. if we're going to take this trade to the upside. Again, previous structures, partials. Let's see how we go. Okay, so looking now, 3.8. Let that come. Let that come down first. So we're at 45 now. That's our flip in. On this flip, in consideration for partials is going to be at 41. Right, this here, not the usual trade that I'd like to consider, but again, this is just momentum of price pushing back into this range. So this is a partial at 41, maybe even lower, 40.90, partial of that half that move there. Just adjusting. Okay. All right. All right, so we'll see how that goes. I'm not in US30, just in gold here. So I'm gonna look at no, not there. So leave that. BTC.
Just before you continue to BTC, would you take that trade for that small?
Sorry?
Would you take that trade on gold? You took it now maybe because
Yeah,
we're
so for
discussing it, but
yeah. So like I said, for me, always with this strategy, I run off stats, right? I'm not running off too much with, letting emotions come into play. It's just okay, if the rules, if the strategy is that we're taking breakout of the opening range, and that's where I'm looking to take it, as long as there's a target where it allows me to take partials for,
that's also okay.
for price to continue up to roughly around here, right? So my partial target's 50% of where price is looking.
That's
That's
that's a good that's a good that
that
is a good statistically a good
statistically
point to take profit.
is where, yeah, partials and then
Yeah.
target in between the range itself, right? So we had quite a significant range. Again, the bigger the range, obviously the more risk there is.
Okay.
Ideally, we're taking 40, 50 pip moves. Um, yeah, we're just running it for, again, like I said, we run it for 30 days. And that's pretty much all I've been doing from from the get-go, right? So
Thanks.
sharing with you guys. I'll just have a look here. Where is it? Right. So currently to date, right? So currently on in August, so Sydney's been okay through the start, and we kind of Sydney's been a better month here. These 2 days didn't trade, and this morning, not this morning, yesterday traded Sydney. Um, and obviously we had two losses here so far. So, for the month we're, two down on Sydney. Sydney's just being that way. But again, we had, quite a significant run through the beginning. And, obviously July was where we had, um, quite a few losses on Sydney and only had the one loss on US. So currently, as it stands, US has still been pretty consistent. So that's obviously why we're running US at the moment. But, you know, we always, I always measure it after a 30-day period, right? Because it's not about like even this, right? The start of the challenge when we first was, I think, the 14th, and we just had a run of losses, depending on the trades that you took, and then we kind of panned out and had a run of clean wins. So the strategy is always, I always measure the strategy based on what happens at the end of the month, right? How many pips to gain? Obviously, everyone's dollar value is going to be different for the strategy itself. But I'm always looking at the pips, right? Because pip gain and loss at the end of the day, if you're making pips, you're making dollars. So yeah, we'll see how we go, and share back into it. All right. So yeah, BTC.
Hey Jason, what's your recommendation for software for trading BTC?
Broker,
Yeah,
exchange.
broker. Yeah, yeah. I've
Yes.
got C Trader for US30 and gold.
Yeah, I mean, if I'm trading, I mean, I do have the occasional time because obviously, Black Bull and um, just mind blank. OctaFX offer BTC as well to trade. So I
Mm.
sometimes, I do throw in a trade here and there on the actual MT4 using those brokers, but I've always traded on either BitMEX if I'm trading for BTC, or I trade on Bybit. It used to be Binance and it used to be Bittrex, but
Yeah,
Bybit currently, and BitMEX if I'm growing my BTC.
yeah, fair enough. And with trading BTC, because I mean I've invested in BTC and cryptos before, but do you still have the same? You can do sort of lot sizes,
Uh,
that sort of level of.
Usually for me, I trade on 10x leverage on when I'm trading with BTC, trading for
Yeah,
BTC. It does work out a little bit different
yeah,
compared to how you would use lots when you're using it with a broker. So on exchanges, it does work differently.
yeah,
The easiest thing for you to do to get an understanding, which is why I
mhm,
don't teach too much on the basics and fundamentals, because ChatGPT has every answer that you could ask for, in particular for the broker or the exchange that you're trading with. So if you have a question
fair
about
enough.
basic technical stuff, jump
Yeah,
into ChatGPT, go, hey, can you explain the difference between trading on Bybit with leverage and trading lots with a broker? And it'll pretty much give you a full explanation to detail of how everything works. Um,
thanks, mate.
yeah, there is a difference of how it does work. So
Yeah,
it's good to get an understanding of that. There is no problem trading on your broker that you're trading gold and US30 on as well. There's no harm in that as well. So, but yeah.
thanks, man.
Cool. So yeah, so BTC, we peaked out at 124,350. So obviously as price approaches that round number 125, we had price peak out, and then, obviously a sell-off that comes into play. But interesting enough, what happened prior to that was, you can see here, like everything, is when there's an imbalance of orders and where price just sporadically moves, um, price coming back down to those areas is highly probable, right? So when we look at that, we look at, even here previously as well, we had it, move quite a significant area amount away and then come back into those orders. Here's, interesting part, but it may not be yet. It may be the bear market where we come back down to 90,000 before price actually gets there. But all these all these pending orders that kind of happen that don't get touched before price starts to move up. Historically, over time, people don't want to believe in a bear market when everyone's on a high of how high BTC is going. I've been through multiple bear markets to tell you now a 60% retracement is normal. Whereas when you're in the height of a bull market or people are excited and we're at not all-time highs, you can't tell no one about a 60% retracement. Nobody wants to hear about it because they're on the bull train. They're going to the moon. BTC is going to 500,000. And while it will or might in due course, it doesn't mean that we're not going to correct before that, right? And history has shown that over and over again, right? So we've gone to 20,000, we come back down to 3,800, we went to 50,000, we came back down to 15,000, went to 60,000, come back to 25 and so forth, right? So even at a 60% correction at a 124, what are we looking at? We're at, 612.72. Is it a possible $60,000 BTC to 70,000 would be our new lows? Possible, like, right? So, you just keep that in mind where, dollar cost averaging into your investment side of BTC is never a bad thing historically over a long period of time, right? You've got a dollar cost average anywhere over the last 7 years and been, in profit, right? So the theory doesn't change because even when BT was at 20,000 and went down to 3,500 or 3,800, as long as you never sold, you're still ahead of the game, right? Even if it was that 60, 70% retracement. So it's no different now where people are, stacking BTC and looking to buy at the moment at 115. I mean, Michael Saylor, he's buying every opportunity that he can to own all the Bitcoin in the world. Well, that's his number one goal, to own as much as possible. But if the dude's buying through the highs and bringing his actual dollar average up, he's obviously pretty confident in how high it can go, right? So he's not too concerned about buying it for 115 grand because he has this expectation mathematically that it should reach 200, 250, 300, 500,000, right? So it's just a matter of time before, price gets to that level, right? It always seemed impossible that BTC would go to 100,000 when it was at 20,000, right? Nobody believed it. And even try and tell someone that BTC is going to go to 100,000 when it was at 3,800. It's the emotional connection that we have with money that doesn't make sense when price is pushing to these crazy levels, right? So going back to BTC, I believe we're in a bit of a correction here. Obviously, after peaking out and hitting a high, hasn't fully done anything too dramatically. May have another look at that, a short-term reversal if we get down below 110, that previous high where we broke through here. We're hovering around that area. So even if we travel sideways here for a period of time, that's fine. It's not too concerning on BTC. It's when we start breaking lows, right? So when we start breaking lows of previous structure, that's where you go, okay, well, is this where we're starting to reverse for a short period of time, right? So we come down here, we retest, then we break another low, and we continue down further, and we break past this low. Cool. Well, that's consideration of, okay, we're below 100,000, then we may want to look to get out of our position once if BTC drops further, cool. If it stays above 100,000, stay in your position. Again, you just need to think about the bigger picture of like, what is the goal? Are you day trading BTC or are you holding it as as an investment? So let's see. Now, why am I having like deja vu of our very first challenge on the very first day of like, it's like win, 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 lose, win, lose, win. let's start a challenge. And then the first day is a loss. Uh, it's the market, right? The market don't care about how you feel, just wants to take your money or give you some. So it's all good. We will play it as it is, record the data, and go from there. So yeah, BTC, BTC. Okay, so US30 here, it peaked out, it came back down. If we broke out of this, yeah, might be a trade here. I know it's quite a significant pullback, 44931 price coming out, and then it's kind of like prices push to a high, come back into the middle, and grabbed any pending orders from that significant move, and may look to continue up from here. So let's just see how we go on US30, if there's anything there. So gold, tell. So that range, roughly there. And US30 looking like we're gonna break out from here out of our range, but let's see. Okay, so US30 breaking out of the range now. We had gold come back in and test that area as well. So see if we yeah, see how we go out from there. One. So one, what's our Okay, so if you took the breakout of the opening range here on US30, your partials are shortly. All right, so that 45151 is a partial area. Only based on a top here and a 1 hour, yeah, 1 hour rejection point. So Yeah, so we didn't have any didn't have any red folders on today to be concerned about for US pairs. Tomorrow, nothing. Thursday, 4 a.m. FOMC meeting. So may see some movement there, but that's quite early. We won't be trading then. But Thursday night at 10:30, unemployment claims. That's, so just one for consideration there on Thursday, 10:30. Put a post-it note up, and then Friday as well. So we've got 12 a.m. Power speak. That's USD should have some influx move there. So Thursday, Friday, we need to keep that in mind for.
Would you skip the trades entirely if there are red folders, or are you looking what
It's more about what
it
happens.
does?
Yeah, more about what happens on the opening candle, right? So, I mean, as rule of thumb with any strategy, if you want to be safe 100%, don't trade it. Don't trade
Yeah,
news.
okay. Yeah,
I'm just gonna see what happens, right? If there's opportunity, there's opportunity.
yeah,
It's not too volatile and we don't have a 150 pip candle on the opening range, then maybe it's a 50 pip candle and it's fine, right? So not
yeah,
even though you should expect movement, sometimes it can come an hour after news even is released, right? So may not
yeah.
even get anything until a lot later on. So we shall see.
Did you enter because it come back into the range for US30, Jace?
Sorry? Yeah, I
Did
did.
you enter?
Yeah,
Yeah.
I'm in US30. But like I said, price needed to come back in, come back down first and then break that high again. So because it price retraced first and didn't just continue out from there, like price continuing straight out from here is like there's been a significant move already. So it coming back down and it happening within the first, 1 to 2 to 3 candles tops. Usually the first two candles after a significant move. If it retraces and continues straight back up, it means it's got it's got a decent amount of volume to potentially just continue out from here. So, but like I said, with the opening range, it's not always about a significant move and then um, trying to catch that breakout. But if price retraces in, it's tried to come in into where we have imbalance, pending orders, that were missed on that opening candle, then cool. We're just confirming this, having this is kind of like that flip candle. Like I was saying, the flip candle on the 4 hour was a nice grab of liquidity first and then close up higher. So naturally push, we should push up from here. based on this big grab of liquidity, right? Because the flip candle is just a bottom wick grabbing all the orders, making the sellers believe that the price is going to continue to drop. But while we wait until there's a little bit more confirmation. So,
Cool.
but like I said, considerations being that we've had significant move already is always going to be, where is price previous structure? Where should I look to secure any partials? And that's going to be, here. And then if the remainder looks to climb back to previous structure, awesome. If it doesn't, that's fine as well.
Cool.
What would you say, you guys, your biggest takeaway from doing the 30-day challenge? What have you learned about yourself?
Mindset is everything.
Mindset is everything.
Yeah, second that.
Yeah, and be very precise in to take the entries and the stop losses, etc., and stick to that, because if you change that continuously or just a little, it does a lot with the result. Because I took a lot of trades, you took too, but I didn't win that much. So there is a difference in
Yeah,
where you enter, where you get out. I see a question in the chat also about entries and stop loss. That is really it's experience, I guess, but then doing it over and over again.
yeah, it's just time with a strategy, right? You guys done it for 30 days. Remember we talked about in the challenge, like you go to get a university degree or a trade and it takes you years, right? You
Yeah.
guys do 30 days and want to discover, miracles. The miracle is there because it's showing that it can be profitable, but it
Yeah.
just takes time with building your resilience, right? Some people have the patience to go through a process, and if it does take longer than 30 days, cool, and it takes longer than 30 days. But if it doesn't and you can get through it in a shorter period, by all means. But the reality is the only difference between this strategy working for you is, one, it's patience, two, it's good risk management, and three, it's just mindset. It's really just letting it go. It's placing the trade. It's, not playing around too much with it. Um, if you're going to play around with it, it means you're taking partials. Like that's the only time you're really playing around with it, or you're just not entering at all. If you're not confident in the setup or the trade itself, then you don't enter, right? That is just the most simplest way to put it. If you're not confident, then don't enter. If you're unsure or there's uncertainty, it's okay to not take a trade, right? Even if I take a trade, doesn't mean you guys have to take a trade. If you guys are not comfortable in it, because for some of you are like, oh, well, there's a bit of a range here, should we have taken this breakout? Well, maybe not, right? But there's no perfect or right answer. All we can base the strategy off is statistics, right? So if statistically, based on my actual trading, not just back testing, right? It's not always about back testing, my actual trading. If statistically I can win, lose, win, lose, win, lose, win, lose, win, 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 and eventually come out at the end of the month and 30 days in profit, then I have a profitable strategy, right? I have something that actually works, right? Versus someone who goes win, lose, 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 lose. Oh, this doesn't work. And 7 trades in there, it's like they've already called it, right? It's no different to any other strategy. No strategy is perfect. No strategy is going to have 100% win rate. And it's something that you kind of adjust and tweak to you as a person, right? Because like when I enter into the market, you may not be comfortable, but that doesn't mean you're wrong and I'm right. It just simply means that that's not within your risk profile. It's not within the analysis that you did. Like it's better to not take the trade and come back tomorrow, right? We're technically speaking, we're taking 1 to 2 trades 3 days a week. There's 6 opportunities, based on US30 and gold, right? There's 6 opportunities a week. If we only take one good trade a week, And after 30 days, we've taken 4 trades and we're up 4% for the month. Is that a good thing or a bad thing? Tell me, guys. Good thing or a bad thing? If you're up 4% for the month based on good risk management and you stick to your 1% and you only take 4 out of the 24 trades for the month, is it a good thing or a bad thing?
It's a great thing.
Great
Yeah,
thing.
it's still profit, and you can add money, and then
Profit, right?
it will grow. Yeah.
Do that consistently, then it grows. But it's it's slow and steady that wins the race, but people want fast and now because that is the world we live in, right? But trading has taught me patience over the last 7, 8 years of doing this, to the point of I'm comfortable with how much I make trading because I'm patient and I'm in no rush and I can accept the loss because it's trading. I paid my rent into the arena, for the week, and that's what it is. And then I come out and I have a win or I have a loss, whatever it is. It's fine. It's because I'm not basing my strategy based on one day. I'm basing it on what happens or what happened for the month, right? What happened for 30 days? How is it progress over 30 days? So far, so good. And for me, it's just every trade that I take with you guys, just gonna journal it into the data because that is all it is. It's just data collecting. Okay. And at the end of 30 days, how did we go? Then okay, we trade more Sydney, we trade more US, or we trade less Sydney and more US, or we don't trade Sydney anymore, and we only trade US, or we only trade Sydney and we don't trade US. Like it's the only way to really test the strategy. It's just getting to that point, right? So where are we? But like I said, guys, don't feel bad when we're on these calls and I'm looking for the trades and I'm looking at gold 1 minute. I'm not looking at US30. I tell you I'm entering like because I'm trading off my phone, and you miss it or you don't enter, like don't feel that you need to rush in and go, oh, I need to get into this trade because I wasn't, the strategy, the objective is still the same, right? If we're breaking out a previous structure. I'm just trying to give you guys a little bit more extra information on my thoughts around what's happening with the overall market or what I'm thinking or seeing. But don't feel obliged to go rush into the market because then you're 100% going to throw out your risk reward on the trade itself versus just sitting out and waiting for tomorrow, waiting for the next trade or waiting for price to come back into, retrace before potentially getting into the trade, right? So, you know, I know it's for some of you it's a shift in between doing early mornings to now nights, but hey, we all make sacrifices to get ahead, right? It's make a sacrifice, learn a skill, get good at it, make money. Okay, now it's worth it, right? It's just that process. Yeah. Like people say, Jace, don't you like sleep? It's like I've been a night owl for 8 years. Like that's what I do. I sleep at midnight. I sleep, just after midnight. I still wake up early. I don't know why. I'm happy with my 6 hours. If I'm tired in the afternoon, cool. I'll have a nanny nap. But other than that, I'm not fussed on sleep. You get enough sleep when you're dead. There's plenty of that. Till then, we just gotta enjoy it. And as long as you enjoy what you do, guys, like this is the thing with trading is trading is not for everyone, which is why, over the last 8 years, I've taught 30,000 people plus on how to trade, and only a very, very small percentage of people keep up with it, right? It's just it does take time, and not everyone has the time or patience to learn it. So good work for you guys jumping in, grinding it away, doing the hard work. Because I can tell you now that hard work pays off. It will come to a point where Man, it was all those late nights were worth it because now I have a strategy that works. At the same time, I can just shift what I do throughout the day to make it work that I'm trading for that 1 or 2 hours a day, and that's it. So it's all gravy, baby, they say. So US 30. Oh yeah, 9. Gold's being a bit slow today. US 30 partials shortly now, soon coming up. Gold's a bit slow. That's all good. If we break straight past 151, I'll let it go for a minute. But if we don't, then yeah, we'll see how we go. Gold's picking up now a little bit. What is it, 12.20? Okay, we get one. Let's see. Let's see. So we're pushing on US 30 here. We've created a bit of imbalance here as well. There was no price recovery before continuing up from here, so there is a bit of imbalance pending there. So not the worst idea. We've got imbalance here, right? So we've got price pushing up into this area, fulfill those orders, so that that partials is not the worst idea. Gold here. Here we go.
Jace, Fernando put something in the chat about the lot size and the risk. I sort of did the same thing as that as well. Do you have any thoughts on that?
Let's
If
have
the same size lot size or same size dollar risk?
Okay, sorry. Yeah, missing the chat here. Was just in the lower part of my screen. So biggest mistake has not been consistent with lot size and rather aiming for a dollar value. So let's say I'm willing to risk maximum 100, then change lot size, max loss is 100. Also, sometimes a very tight stop loss would take me out of the trade to then watch it bounce. Like the stop loss is always got to be other side of the range. Regardless, if you're trading this strategy, it has to be other side of the range. And that's what I'm saying, like your risk reward is not always going to be one to one. But that also means is do I take the trade, do I not take the trade? Right. So as for like for this strategy, if you're going, okay, this is my opening range candle here, and this is my other side of my range. In this particular setup, the 0.5 to 1 means that that's a partial and my actual 1 to 1 is up here, right at the top of that, at the top of this candle here. My only consideration for taking this is because partials is that previous structure, right? So otherwise, it's not something that should be considered as taking the trade, because ideally you want to be your structure, you want to be taking it at previous structure, which there's no reason why it can't hit this area, but there's just a lot of noise before it actually gets to that price point. And considering price has made a significant move already, right? So always when I'm talking about entries and exits, I noticed Blake, you had a message there as well, is previous below the opening range candle, which is our 11:45 close, and our target's always ideally a 1-to-1. If you're not comfortable taking it, if it's not a 1-to-1, don't take it. You'll look at the data after a period of time and go, okay, well, my win rate's high when I take, 0.5, 0.6, 0.7, 0.8, 0.9 trades, and it justifies taking those trades, right? If it's not, then and you're having more losses than wins, then the numbers will make the difference. That's why I said, like, I put a pip value and a dollar value on my data collection, just because I'm using the same lot size every time. So for you guys, if you're trading with obviously a smaller account, work out what that percentage is up to a value of 100 pips, right? So if just say 100 pips, is 0.01, right? And 0.01 meaning if it moved 100 pips, it's moved $10, right? That means that even if you're trading, a 50 pip trade and you're using 0.01, right? It's still less than that 1%. That's that 1% meaning that if you had a $1,000 account and you wanted to stick to that 1%, then technically you're using 0.01. So guys, here partials already on. I'm taking partials now. Closing out one lot there, and then adjusting my stop loss to break even. Okay. Right, so what that looks like now is I've taken partials here. Still have my target here, and now my stop loss is just above break even, right? So if price comes back down and wicks and hits my stop loss now, that's fine. I've locked in partials. If it continues up, hits take profit, awesome. We're done for the day on US30. Gold, on the other hand, I'm still in gold as well. See what happens. But to answer your question in regards to adjusting your lot size and trying to focus on a dollar amount, like I said, the biggest thing for this is always going to be percentage. And the reason why I say focus on percentages is because if we have, for the month we have 30 trade. We'll have five potentially, right? We have 2 trades a day. It's 5. That's 10 a week. That's 40 trades potentially for the month if we take every trade. We're not going to take every trade. So we're probably going to take, let's call it 20 trades, right? But if we take 20 trades and every trade that we take is focusing on a 1% risk, right? If we focus on, and regardless of the lot size, guys, and I know that you guys are, if you're trading with a smaller account until you get comfortable, awesome, doesn't really matter, right? It's about finding consistency and something that you're happy with. Trading the same lot size, I recommend, as long as it's within that 1% of a maximum of 100 pips, because we don't want to take more than 100 pip trades ideally. and you're taking 1% risk per day on trades, then that means that if we take 20 trades and you lose 10 and you win 10, you should be roughly, it's always going to be approximate because it's never going to be exact, but approximately, you should be at, a break even, right? A 10% loss, a 10% gain, you're at a break even, right? If you have, you know, 12 wins and 8 losses, you're going to have a little bit, a few percent gain as well, right? So I don't want you guys to get caught up on, I need to make a dollar amount in order to justify the strategy. I just need to focus on a percentage risk, right? If I'm risking 1%, I'm going to gain 1%, but use the same lot size. Whatever that lot size is, based on your account size, 0.01, fine, 0.02, whatever it is, use the same lot size for the next 30 days. I can tell you now, that's why the pip value in my data collection is what's important, because I know that I've used the same lot size every single time, win or lose. I'm adding pips or I'm losing pips. And at the end of the month, if I'm up 1,000 pips, well, I'm up 1,000 pips, I'm up 20 grand. Or I'm up 100 pips, I'm up, two grand, whatever it is, right? My pips don't change, right? It's always, sorry, my lot size doesn't change for strategies.
Thanks.
Yeah. Cool, cool. All right, guys. So do you have any questions? So I'm going to try and keep these calls to, obviously it was a little bit slower start tonight. If you made money on US30, awesome. If not, and you're still holding gold, that's fine as well. But I'm going to try and keep these calls, like I said, to 45 minutes to an hour. I can respect people's time. It is 12:30 a.m. for us Aussies. I know it's earlier, later for those people overseas as well. Afternoons, mornings, trying to make it work. But US is obviously where the volatility is and where the market starts to move. So I'm excited to do this with you guys over, the coming weeks, months, however long you decide to stay in and continue to learn through this process. But I'm going to leave it there tonight, guys. Great work.
Hey, Jace.
Yes.
Will you have a replay? Because I couldn't catch the first 15 minutes.
Yep. So I'm going to be recording every one of these, and I'm going to upload them a day later, onto YouTube. So, just gonna, start putting it out there.
Cool.
But a day later, so it's, obviously it's old news by the time it gets there, but it's also a place for you guys to go and, have a look at it as well. So I will, update you guys with the link, once it's up there tomorrow.
Thanks again, mate.
Thank you.
Perfect. Thanks again.
Guys, have a
Cheers.
great night, great morning, great evening, and I will see you guys tomorrow.
Yes. Good night.